Thanks for tuning in and welcome to your September Cairns Real Estate Market Update. As forecast and continuing on from last month, we have a very healthy and resilient market and showing signs that will hopefully continue. Open for inspection numbers have continued to stay quite healthy, sitting at around about 7.3 buyers through every open for inspection. If we do look a little bit closer and peel back the onion, there is a theme of a few hotspots there that do skew the numbers, with 58% of properties having 5 buyers or less come through, which is on the lower side, and 22% of opens having 10 buyers or more come through, which is definitely on the higher side. So a few hotspots there, but in general, very healthy, very robust open for inspection numbers. This is a leading indicator of overall market interest and a very close metric for us all to watch. There has been a marginal increase in properties available for sale within the Cairns region as well, currently sitting at about 680 listings. This is up from 650 just a month ago. As we all know though, this is still historically low compared to our baseline. There also has been a very important note, several highly notable apartment sales in the Cairns CBD and Cairns North, which have smashed previous sales records. While they're the exception to the rule, they do highlight and articulate there are still a few highly motivated, very eager buyers to secure something, and some great results still to be had. One property of which I can't say too many details yet because it hasn't settled, but I sold a property in this complex for $770,000 last year, and we've just sold one a few levels up for $110,000 more. So significant growth just in that finite 12-month period. Rental demand also has surged for Cairns City and the city fringe suburbs, with just 38 apartments in this whole area, Cairns City, Cairns North, Parramatta Park and Westcourt available. This is down 10% from October and is a very significant number. We've also noted that while the investors are not all that active in the apartment space right now, with 15 to 20% of inquiry coming from investors, they have absolutely returned to the market, just in a different niche. Currently, they are hyper-focused in the south side of Cairns, so freestanding houses south of Mount Sheridan, and this has been evidenced by the sheer number of investor offers that we're receiving on some properties. So some colleagues in my office, we've had open for inspections with over 30 attendees, 20 plus opens, and about 60% of those offers have come from southern investors. So they have returned, they're just intensely focused on a different part of the market, as they are seeing that to have a significant upside for the future. Some more good news in terms of overall building supply. Cairns has now had the 4th consecutive month of new building approvals, with approval now sitting 13% higher than a year ago. Importantly, and you'll see this will be a national trend we'll talk about in just a moment, is that while the approvals are up, the housing starts are still quite low because the tradespeople are just simply not available. Moving out though, looking nationally, continuing on from that housing start trend, housing starts are reportedly at their lowest level since 2012, despite the increase of new building approvals, as mentioned, with industry bodies calling for an increase in skilled migrant visas to help fill that vacuum. Very, very interesting metric that while there's an appetite to build, that we have a skilled labour shortage. So despite positive media sentiment around new approvals, that void is not being filled. So bear that in mind when you are consuming any of your news out there. The mortgage wars are definitely heating up. We mentioned a month ago the Big Four were predicting some interest rate decreases towards the end of the year. They have already started, with most banks already reducing their variable loan rates to attract some new customers into the market. And a very interesting financial metric too, and I think it paints a picture for what may be on the horizon. Of course, time will always tell, but the average household savings have now reportedly become lower than pre-COVID levels. This means over $300 billion in lost savings has happened over the last 4 years, and I believe the latest data say they're actually lower than pre-GFC levels, which is a fascinating number and something that we'll watch with bated breath for the results of that. Also, in the poster child of Cairns real estate, because the news always loves to talk about it, Sydney and Melbourne. 79% of Melbourne suburbs and 25.9% of Sydney suburbs have reported a decline in median values in the last quarter. Important to note, it's a very marginal decline. It's something like 0.9%, but still a decline nonetheless. A small little aside and some information that was only just released the night before me recording this newsletter and information for you all, and a very interesting metric that I want you to give the appropriate heed and respect to. The US Fed has just announced their first rate cut in 4 years. This is important because the last 3 rate cuts the US Fed announced were all followed by a recession. One in 2001, the GFC in 2007, and then a very small technical recession in 2020 around that COVID time. Very, very fascinating bit of news and metric to hear. While our local market is motoring along and is showing some great resilience, robustness, and health, there are some very interesting cracks appearing in the national market and further global economic landscape. So watch this space. Make sure if you are thinking about doing anything, you do factor the larger tapestry at play. And if you have any questions at all, I'm always at your service. Thanks for your time, and I'll see you next month.